Hi, everyone. Welcome to the LATAM Stocks Podcast. I'm your host, Patrick Flood. Today, I'm speaking with Fernando Siqueira. Fernando is the head of research at the Brazilian brokerage guide Investimentos. He's also a professor at Fundação Getúlio Vargas, FGV, which is one of the best business schools in Latin America. So we've got a ton to talk about. He posts a lot of great content about markets and particularly Brazilian investments. So I got a ton of questions for him. Hi, Fernando. How are you?
Hi, how are you? Quite fine.
Good. Thanks for being here. Excited to talk to you.
Me too. So we can start when you are.
So yeah, I've got a ton of market questions. Before we get into that, can you just tell me a little bit more about your background, maybe what you do at Guide Investments and how you follow markets?
I'm head of research. We have a small team, but we have some guys covering economics, some others covering only stocks, stock centered or stock oriented, some others covering real estate funds. And we also work with asset allocation ideas. So this is pretty much what we do. We try to cover all the market, and for some investors, we offer more stock ideas. For others, we focus on fixed income. For others, real estate funds. And of course, we can put all of this together in asset allocation report. So this is what we do. We try to cover all the markets, all the kinds of investments here in Brazil to offer advice for our clients.
Okay. And what courses do you teach at GV? Do you teach finance or economics?
More finance than economics. This is interesting because I'm an economist. I have a doctorate degree in economics, but most of the time I teach finance because in economics we have a lot of people that study a lot and then they become professor. So there is plenty of professors of economics in Brazil. On the other hand, in finance, most of the people that study finance, they work, they don't teach. So most of the time people invite me to teach finance than economics. So most of the time I'm teaching finance, particularly investments. They starting course on investments and also derivatives and some other courses. But the last one was derivatives. It just ended in November.
Awesome. It's really cool. I did GV too, so it's a great school.
Great.
So cool. Let's get into the market stuff. The first thing when I was going through your recent research you posted, I think, is your call for the Bovespa in 2024. So you posted that you think it's going to 155,000. Right now it's 125 to 130,000. So that's, I don't know, a 20+% return in 2024. So can you walk me through your thesis for the bull case for the Bovespa?
Yes, it's somewhat a bull case. I've been seeing reading some reports from other guys, not the reports, but actually some new pieces of news quoting the target of other analysts or strategists. I think our number are a little bit higher than the others, but not much. My view is that earnings in Brazil will be good in 2024, particularly because the economy is working well, despite all the interest rate hikes in Brazil that we saw starting from the beginning. So our target is a little bit over the target of other strategies I have been seeing recently, but not much. I believe that the bull case here is that in our view, earnings are growing because the economy is growing. As I said, the economy will grow probably close to 3% this year and another 1% next year, maybe more. And also earnings are growing because interest rates are going down. There is a lot of debt in the Brazilian companies currently. And not only in Brazil, everywhere. So, but interest rates are going down fast. So this will create a good increase in earnings because the interest expense will be lower. What we are not so confident is commodity prices. Because we think the risks are more on the downside because of the slowdown in the global economy. But at this point, earnings in this group are a little bit not safe in the sense that there is no downside, but we will end the year with earnings compressed because partially oil prices are very low, food prices are low, sugar prices are decreasing. So all in all, I think that the downside from commodity earnings is not that big. And what's more important here is that historically in Brazil, every time interest rates go down, valuations go up. And this didn't happen this year so far. I believe that there are several reasons for this. One of them is because most of investors are still averse because the political scenario is not so good, because interest rates are still very high, so on and so forth. But what I can see is that historically this happened, valuations goes up when interest rates go down. I think next year will be the same, and the starting point is very good to see that there is a lot of room for valuations to improve, particularly in this group, as I said, the more domestic-oriented stocks. So this explains our target, a little bit of earnings growth and a lot of faith in Brazilian equities. As I said, this always happens when interest rates go down. And interests are going down not only in Brazil. Now we are very confident that interest rates are going down in the United States. The only risk to this target, in my view, is that maybe we have sharper deceleration in the global economy, a recession, let's say globally. That could be a risk to our thesis. This is the main risk to our thesis. We are very confident in interest rates going down, very confident in earnings going up in Brazil next year, but not so confident that the global economy will go through a soft landing or a more hard landing. So this is the risk.
Sure. So the interest rates going down makes perfect sense. I think there's going to be an announcement today after market close, and it should be another half percentage point cut. That benefits everybody, right? The entire Bovespa, lower interest rates, lower financing expenses. But in terms of just earnings growth then from the operating businesses, are there any sectors in particular that you are particularly bullish on for 2024 in Brazil? You mentioned maybe neutral to negative on commodities. So I don't know, retail, manufacturing, education, maybe. Is there anywhere you're particularly focused for next year?
Number one pick would be education again. Sector bullish for 2023, and we are entering 2024 still bullish in this sector because this is a sector that has a lot of leverage in the economy. They are, as we say here, left part of the pandemic only now, because for them the negative impact of the pandemic was bigger than the rest of the economy. So earnings are growing because of this. They have a lot of debt as well. So interest rates going down is good for them. And maybe there is a benefit of government increasing the support for this sector. So education is maybe the number one pick. Another sector that we like is healthcare. Companies are also growing most of the time because of acquisitions, but also growing organically. And the valuation is not so stretched at this time. So price going down usually benefits this group, not only in Brazil, but also globally. I think healthcare can perform better in 2024. So this is a sector that I like too. And also what we like to is road concessions, for instance. This is a sector I like because it's not so cyclical. It's more defensive, but also they are increasing. And particularly there's been more and more new concessions coming in the market in Brazil. So the companies that we have in the stock market, particularly EcoRodovias, they are growing because they are adding new concessions to their portfolio. So their earnings are growing very, very, very fast. Most of this growth will come in 2023, but there are something to come in 2024. And also in this case, interest rates going down is very, very positive because, as I said, this company have new concessions. To buy these new concessions, they had to pay a lot of money and also make a lot of investments before starting to cover to charge the cars in the road. So revenues are coming now, but the expenses are already paid. So earnings tend to go a lot in this group as well next year. And retail, I think this column retail is a little bit out of consensus, is on pro and con, let's say. But what we are starting to see is that the negative impact of global competition in the retail business is smaller than many believe. First. Second, we are discussing a lot of people are afraid because of the potential tax reform in Brazil, but what we are talking to the companies that for many of the retail companies, the negative impact is smaller than many people think. So this is a concern that will not happen as people fear. And also interest rates usually is good for retail business. So retail is also another out of consensus call for 2024.
Yeah, it feels like in 2023, retail might have been the most hated sector in Brazil. I mean, they got abuse.
This is a good
No
entry
one.
point for 2004.
Exactly. So even if it just reverts to the mean. So then what about sectors you're more bearish on in terms of earnings? Who do you think underperforms? If retail's going to have a better year, where would you be underallocated or even short?
What I don't like is metals and mining. I think they increase a lot. Actually, mining companies they have a very good year despite the global slowdown in the economy, even the slowdown in Chinese economy. So I think they will end the year with very high prices, including very high price for iron ore. I think this is hard to sustain for 2024. So I don't like this group. I don't like oil companies as well. I think that even if the oil prices are going down already, and these companies are far from peaking in 2023, I think this is the scenario is not good for them as well. So slow growth globally is not good for oil companies, and not only including Brazilian companies. So this is a sector that I don't like. I don't like also real estate, particularly construction companies. This is also, I think this is weird to say that I don't like construction companies when interest rates are going down.
Yep.
But what I don't like in construction companies this moment is that there was an oversupply of buildings here in Brazil, apartments. And what we are seeing probably is that because of this oversupply, prices move up more than many expected. So what probably will happen is that they will sell these inventory of buildings at a very low price. So their earnings in 2024 will not be as good as many believe. So they will deliver a lot of buildings, apartments, but because of the fact that costs were very, very high, the price that they will receive will not compensate. So the earnings will be very small. So this is a sector I don't like. I prefer more the low-income properties than the low-income builders than the high-income builders. Because in this case, the projects were smaller and the cost efficiency in terms of cost was better, and the government support is also something positive in this case. So I think that I prefer low income builders than high income builders for 2024. I think this is pretty much the calls where I have more sense. Another sector I don't like much is banks, large cap banks. I think the group had a very good year because in part because of the bearishness of investors in general, and particularly local investors, compared to many other sectors. Banks are trading close to the average historically. Meanwhile, Ibovespa in general are very, very, very cheap. So this is a sector that there is not much upside, and I think that as soon as local investors come to the market again, the inflow to local funds start to increase. They will prefer the small cap companies rather than large cap companies. So in this case, the group that can suffer the most is large cap banks, because I think what happened this year, particularly by the end of the year, is that the upward movement in the Brazilian market was driven by foreign flows, and foreign flows usually by large cap companies, particularly banks, Petrobras, Vales, and this kind of companies. So next year, I believe it will be more local market investors driving the market, and in this case, they will prefer small caps, and banks which should underperform in this scenario. So
Brazilian local retail investors have a historic preference for small caps. Is that right?
Yes. I don't say that I prefer small caps. I'd say that foreign investors don't invest in small caps in Brazil.
Right.
Because
they buy
for them,
Petrobras or Vale.
Yeah, Petrobras, Vale, and banks. So this is pretty much what they invest. And they are driving the market for now. But I believe that next year will be.
Okay, so we were just talking about interest rates, and I'm curious, you mentioned that you were maybe bearish to neutral on housing, even though it's going to be a declining rate environment, which isn't typical, right? Normally people think rates down, housing up, but Brazil's still going to have a pretty high interest rate, even at the end of this cutting cycle. I see a lot of predictions for 9.5% for a terminal rate. So where do you think rates end up in Brazil in 2024?
between 8 and 9 to our target. Our expectation is 8.5, but there is a chance it will be lower, probably
Okay.
lower than higher than this. And this is the discussion right now. So how low it can go in 2024. We don't expect the central bank to increase the pace of cutting, but we believe there is a chance that if inflation continues to go down in Brazil and go down globally, there will be room for a bigger cut by the end of next year. So in our view, they will probably reduce the pace to a quarter cut by mid-year. But if the inflation continues to surprise to the downside, oil price continue to go down, this environment continue to more time, continue for a good portion of 2024, inflation will probably be lower, and in this case, there will be room for central bank to keep the half percentage point for longer. In this case, the terminal rate by the end of the next year will be lower than 8.5.
Because even at 8.5, and if the inflation say 3.5, 5% still a pretty attractive real yield globally. Do you think?
Yes, that's why we believe that this cutting can be, this easing cycle can be higher than this, not lower but bigger. Because if inflation continues to go down and by the end of the year it's close to 3.5%, that real interest rates will be pretty much high. So when the central bank, if inflation is close to 3.5%, 3.5%, central bank should be more neutral than how can I say, restrictive on in terms of monetary policy. So be neutral.
So yeah, so even if Brazil ends 2024 at a high real yield, does that necessarily mean we're going to see increased inflows? I mean, real yields have been high in Brazil all year, and in your scenario of neutral to down commodity prices, what does that do to the Brazilian real in 2024? It's been range bound; it hasn't reacted to the high real yield. So, what do you think about the currency in 2024?
Yeah, this is a good question. So our expectations is that BRL should be close to 4.85, 4.90. So this is our base case right now. So it's close to what it is right now. But of course, there is a risk that, to say the truth, this is a very tricky question because I'm not sure if what will be more important next year is the fact that Brazilian real interest rates is too high, and the economy will be probably doing better than the rest of the world. This will support the BRL, especially because the trade surplus will continue to be very strong. Or what is more important is the fact that commodity prices are going down, and Brazil is a commodity market, so the BRL should depreciate. So in our forecast, the BRL does move sidelining. So in our view, BRL is not the best investment in Brazil right now. In terms of asset class, we are pretty much more confident in fixed income and in the stock market than in the currency market. So because of this, because we have a negative view for commodity price in general.
So, do you think in this scenario then that we see increased corporate debt issuance? What do you think about the corporate fixed income, right? If interest rates are down, so earnings are up, do you think companies start to lever more? Because the domestic fixed income market's been pretty muted at high interest rates. So what do you think happens with corporate debt in 2024?
This is a good question. I think the activity will continue to be hot, but more in terms of refinancing or changing the nature of their debt. Because what happened is that during the pandemic, the debt of most companies increased a lot. In several cases, not in some, in several cases, debt increased, and many companies have to issue new equity as well. Because the results were very, very bad during 2020 to 2021. And so over time, what we expect is that companies in general deleverage. But that it doesn't mean that the debt market will not be strong or be hot, because rates will be lower. So there will be plenty of opportunities to refinance their debt. So this is probably what will happen next year. But in particular, what we believe will happen is that there will be more issuance of equity. I think in terms of capital markets, what will be more important, more relevant, hotter will be equity and also real estate funds, and some other alternative investments like infrastructure investments, infrastructure funds, which invest pretty much in debt market, and also agricultural funds too. This is a market that's been increasing in Brazil. It's called in Portuguese FIAGRO, which is sort of a real estate fund, but related to the agricultural sector. So these markets are probably hotter than the debt market. But even in the debt market, I think it will be hotter than 2023, because what we saw in 2023 was some companies were defaulting, particularly Light, you probably remember, Americanas as well, and some smaller companies. And what happened in January was that there was a freeze period during the first half of 2023. So over time, with these issues become in the past, and also the fact that rates are lower, so there will be plenty of opportunities for companies to refinance their debt in better terms.
So you think we'll see increased IPOs in 2024 compared to 2023?
I think yes. We mentioned this in our report. What happened in 2021, 2021, there was a boom in terms of equity issuance in Brazil. So the negative side of this, and some people have been documenting this for a while, is that every time there is too much issuance, the markets go down. So what we had, and this happened, and when the markets are going down, just like in 2022, 2021, and even in a good portion of 2023, no one will issue new equity. And also because valuations are very low. So what we saw in 2022, 23 is that the Brazilian market is shrinking, so reducing, compressing. A lot of asset managers are closing their doors. Brokerage firms are struggling. So people are not demanding new issues of nothing, let's say. So probably next year will be better.
Why is that then? I'm going to dig in a little. Why is the asset management industry in Brazil shrinking? Is it just cyclical because of a bad couple of years? Okay.
Yes. I remember exactly this discussion in 2015, beginning 2016, because after some years of bad performance, markets going down, interest rates going up or staying very high for some time, people say, I don't need to add any risk to my wallet. I just should invest in fixed income, in government bonds. So the asset manager is struggling at this moment. So this is what happened again in 2022 or beginning 2003. But to a lesser degree than in 2015 and beginning 2016.
Do you think some of the fintech and digital banks are starting to eat into the traditional asset management industry too? I think I saw Nubank's numbers. Their investment product has like 10 million active users monthly, which is huge.
This is part of the development of the financial market in Brazil, or what people call financial deepening. Because think about how the market worked in Brazil like 10 years ago. Usually there was not many opportunities. It was not easy to access, for instance, the debt market directly. It was very unconventional, let's say. Real estate funds are just starting. So another kinds of several investing abroad was very, very difficult. Jump to 2023 and the situation is completely different. So we have plenty of real estate funds. It's very, very, very easy to invest abroad. It's very, very easy to buy government bonds directly. You don't need to do this using a hedge fund. So what is happening in Brazil is that it's much more easier to invest now than 15 years ago. So you don't need to put your money into a hedge fund. If you want to access different markets, you can do this directly. So, and also the FAs, the financial advisors, this is a very big industry in Brazil. They receive more money when they do things directly than when they invest through a fund, like a fund or real estate fund. So and they have the knowledge enough to do this. So what we are seeing now is that people are investing they are diversifying their investment directly. They don't need to do this investing in equity funds or in hedge funds. This is another reason why the asset management industry is struggling in Brazil right now.
Interesting. So yeah, but long term then with the financial deepening, there's no reason to be bearish on Brazilian financial services on a 10-year time frame, no?
Part of the problem is very high interest rates. So a lot of money went through government bonds. So this will change next year. But the other part is that people are investing more directly in several different kind of assets, including real estate funds. As I said, buying directly the debentures, which is corporate debt. They can invest directly abroad. They have cryptocurrencies right now, which is taking a lot of money from the industry as well. People are not talking about this year, but in 2020, 21, even the central bank realized that a good portion of the flow that we're seeing sending money abroad, it was from people buying cryptocurrencies in general. So this also was a problem for the asset management industry in Brazil.
Yeah, it's picking back up again too. Bitcoin's up 150% this year, so I wouldn't be surprised if that continues next year too. But Fernando, this was a great conversation. I know you've got to run to another meeting, so is there anything we didn't cover that you think, my audience might be interested to hear about Brazil and 2024 before we hop off?
No, I think one thing I didn't mention here too, I don't know if you are more focused on stocks, but talking about Brazilian market, something that we find interesting is that there are several assets that are related to interest rates that will benefit from lower interest rates. And as I said, we like real estate funds. We like these infrastructure funds too. They are traded in the Brazilian stock market. And we like less. So I think the worst asset alternative investments is just Fiagros. A lot of people believe Brazil is, of course, very strong in the agricultural sector. But there is a problem next year. Probably you don't have a very good harvest, or not as good as in 2023. And there is a risk that it's lower, and really lower because of the El Nino discussion. And so probably And also one thing that is interesting here is that these funds, I don't know why, they invest more in the CDI. They are linked to the CDI interest rates. So it's interesting that most of the investments in Brazil is linked to the inflation. But in this kind of is that related to agricultural sector, these Fiagros, they are more related to the CDI rate. And as I said, I think CDI rate will go down a lot next year. But maybe inflation does not go down so much because of these issues in the agricultural sector, the El Nino, and so on and so forth. So I think the upside in these Fiagros are not so good. And this is something weird that a lot of people like Brazil. I receive a lot of questions from investors looking for alternatives in the agricultural sector because they like the sector. But what we have, in my view, what we have in the Brazilian market is not good. It's not good for investors in 2024. So it's sort of a weird call that we are a very good, very strong producer, very big producer of agricultural products, but the alternatives to invest in this that we have in our market is not good.
Yeah, I think there's some compelling smaller cap equities if you want to look for them, but we already talked about international investors don't buy Brazilian small caps. So you're right though. There's not a big large cap or the funds that are as attractive.
Well, there are some stocks I like, despite I don't like in commodities in general. I think that São Martinho is a small cap too. I think sugar price. There is a bull case for sugar price over the next years because more countries are starting to produce renewable energy, including India. SLC, which is one of the biggest agricultural company in the stock market in Brazil, I think there have some positives even in this scenario of lower grain prices or El Nino risk because they are diversified in terms of where they produce their grains. So I think this is an interesting case for investors. But as I said, the product that are more on a new product called Fiagros, I think it's not good in general.
Yeah. For what it's worth, SLC is one of the tickers I get asked most often about. from the gringos. I don't know why, but they follow it, and the international audience follows it and likes it. So
Yes.
I pay attention to it. Fernando, where can everyone find you to follow your work? I know you post regularly on Twitter. I'll put it all in the show notes, but give them a send off.
Yes, I post on Twitter eventually. I post some stuff on LinkedIn as well. We also have a channel on YouTube, have morning calls. It's in Portuguese, but we have all of these, including yesterday, a few days ago, we did our 2024 scenario discussion live on YouTube, and also publish our content at our website at Guide Investimentos as well. So everything is there.
Great. I'll put it all in the show notes. Thanks for doing this. It was a
Thank
pleasure
you.
talking.